14 countries with zero income tax. In a global landscape shaped by diverse fiscal policies, several countries have emerged as havens for individuals and businesses seeking to optimize their financial arrangements, each offering unique tax advantages that draw in residents and investors from around the world. Welcome to Pani Investors, where future millionaires come to get inspired. If you enjoy our videos, please do not hesitate to hit that like and subscribe button, and turn on the notifications, so that you don't miss out on new videos we post. You can also follow us on X at FanInvestors1. These nations have strategically positioned themselves to attract individuals seeking favorable tax conditions, whether through the absence of personal income tax or innovative citizenship programs. In today's video, we will delve into the distinct tax policies of these countries, shedding light on the broader implications and appeal they hold for those looking to preserve their wealth and financial flexibility. So let's jump right into it. Here are the 14 countries with zero income tax. 1. Brunei, a diminutive yet affluent nation in Southeast Asia, stands out for its policy of not levying personal income tax on its residents. This is largely due to the significant revenue generated from its thriving oil industry. The government relies heavily on oil exports to sustain its economy, which grants them the financial stability to forego personal income tax. As a result, Bruneians enjoy the benefits of this oil wealth without the burden of income tax deductions. This policy has played a crucial role in maintaining a high standard of living for its citizens. 2. Vanuatu. Situated in the heart of the Pacific Ocean, Vanuatu is recognized as a tax haven, making it an attractive destination for individuals seeking to minimize their tax liabilities. One of the distinctive features of Vanuatu's tax regime is the absence of personal income tax. This means that residents, as well as those who choose to establish financial ties with the country, are not subject to income tax deductions. This policy has helped position Vanuatu as an enticing option for businesses, investors, and individuals looking to optimize their financial arrangements. 3. Andorra. Nestled between France and Spain, Andorra is renowned for its favorable tax environment, particularly its exemption from personal income tax. This small European principality has long been an appealing destination for those seeking to manage their wealth and investments with minimal tax implications. The absence of personal income tax allows residents to retain a larger portion of their earnings, making Andorra an attractive choice for high-net-worth individuals, entrepreneurs, and retirees seeking to preserve their wealth and enjoy a high quality of life. 4. St. Kitts and Nevis. In the tranquil waters of the Caribbean, St. Kitts and Nevis is making a name for itself with its Citizenship by Investment program, a unique initiative that offers a pathway to citizenship in exchange for a significant financial investment. One of the key draws of this program is the favorable tax conditions it provides to new citizens. The absence of personal income tax offers an enticing prospect for individuals looking to optimize their financial portfolios. By participating in this program, investors and high-net-worth individuals gain access to a jurisdiction where they can manage their wealth with greater flexibility and potentially lower tax obligations. This, coupled with the country's picturesque surroundings and stable economy, has positioned St. Kitts and Nevis as a sought-after destination for those seeking advantageous tax arrangements. 5. United Arab Emirates. Known for cities like Dubai, doesn't impose sales or income taxes on its citizens. Instead, the government relies on alternative revenue streams. For example, foreign oil and gas companies operating in the UAE contribute taxes, although the specific rates are often confidential. Additionally, cities like Dubai impose municipal taxes on certain properties, and alcohol is heavily taxed. This approach allows the UAE to generate revenue without taxing personal income. 6. Oman. In Oman, residents with salaries or wages aren't taxed. However, there are specific deductions for Social Security-type charities. People working in private companies are required to donate a percentage of their wages to a Social Security fund. Employers also contribute to this fund for injuries. While Oman doesn't have personal income tax, it has tax treaties with other countries. This means that residents originally from other countries may still have to pay taxes to their country of origin. 7. Qatar. rich in gas resources, doesn't impose personal income tax on its residents. However, commercial businesses must follow company tax laws. Companies, rather than employees, are subject to taxation, paying a percentage of total state income annually. To be considered a resident, one must stay in Qatar for a specific duration. While Qatar avoids personal income taxes, it still generates revenue through other means. 8. The Bahamas. This picturesque cluster of islands doesn't impose personal income taxes. However, individuals with jobs, whether through companies or self-employed, must pay a form of national insurance from their income. This applies to both residents and non-residents. Unfortunately, only residents can avail themselves of the benefits funded by national insurance. Many wealthy individuals are drawn to the Bahamas due to its tax-free status. 9. Cayman Islands. Similar to the Bahamas, the Cayman Islands are often considered a tax haven. It doesn't have inheritance, corporation, or income taxes. Instead, the government relies on an economic model that involves fees, duties, and indirect taxes. Import duties and work permit fees are major contributors to revenue. These revenue streams are collected under the government's coercive powers, meaning there's no direct exchange of goods or services. 10. Bermuda. With a population of over 65,000, Bermuda doesn't require its residents to pay income tax. However, it does have other taxes in place. For instance, anyone with a job through a company or who is self-employed must pay a type of national insurance from their income. Non-residents are also subject to these taxes, but they don't receive the benefits funded by national insurance. Land tax is another source of revenue. 11. Saudi Arabia. This country heavily relies on the exportation of petrol. While there's no sales tax on services, there is a religious tax imposed on businesses. Corporate tax rates can vary based on profit margins, ranging from 25% to 40%. Petroleum companies are taxed at a rate of 85% on their net profits. Additionally, business-related expenses are tax-deductible. 12. Kuwait. With its thriving oil industry, with approximately 104 million barrels of crude oil, is a significant source of revenue. However, this country doesn't impose personal income tax. Only foreign companies working in Kuwait are required to pay a corporate tax of 15%. Kuwait has a comprehensive social security system that covers various aspects, including disability benefits, sick pensions, and free public health services. 13. Monaco. Considered a tax haven, Monaco doesn't impose income tax on its residents since 1870. However, specific types of businesses are required to have their profits taxed if they conduct business outside of the country. The government has treaties with certain countries for capital gains or wealth taxes. This has contributed to Monaco's reputation for financial privacy and attracting individuals from around the world. 14. Bahrain. As the largest and fastest-growing financial area in the Middle East, Bahrain is strategically diversifying its investments into areas like real estate and tourism, relying less on oil revenues. While employees don't pay personal income tax, they are required to contribute 1% of their total salary to a fund for the unemployed. This tax is exempt for specific groups, such as elected officials and military personnel. There you have it, 14 countries with zero income tax. These countries have adopted various revenue models to sustain their economies without imposing personal income taxes. Understanding these approaches provides insight into the diverse strategies governments employ to generate revenue and promote economic growth. Thank you for watching. If you enjoyed our videos, please do not hesitate to hit that like and subscribe button, and turn on the notifications, so that you don't miss out on new videos we post. You can also follow us on X @FanInvestors1.